Personally, it changed the entire way that I've thought about money and the flow of money and where people put their money. So if you're listening to this episode and you haven't listened to the previous three, level 1, 2, 3, go back and listen to those. You are the asset. Level 1. Level 2 is figure out your bare ass minimum, which was a micro level view of your personal finances. Level 3 was liquidity, which is more of a macro level view of your finances.
How do you find the will to fight back against a world that wants to keep you sedated, average, and stuck in place? Join us for the tools and strategies you need to create a life of abundance, discipline, and high achievement. This is the Tactical Empire with Jeff Smith.
Another episode of the Tactical Empire. I am joined by Sean Ryder today, and we are headed into level 4 of the 7 levels series.
I'm going to call it a healthy obsession with level 4. Kudos to you. I mean, we've done podcasts on this particular topic, but we are going to focus on it in the realm of the 7 levels of financial freedom. Level 4 is building your own banking system. This level single-handedly has completely changed in a short sentence my family's financial life. It just completely changed where we're heading and what we're doing. For me personally, it changed the entire way that I've thought about money and the flow of money and where people put their money. So if you're listening to this episode and you haven't listened to the previous 3, level 1, 2, 3, go back and listen to those. You are the asset. Level 1. Level 2 is figure out your bare ass minimum, which was a micro level view of your personal finances. Level 3 was liquidity, which is more of a macro level view of your finances. Where is your cash? Where is your capital? Where is your equity pent up? And what can you do with those things on your pursuit of financial freedom? Level 4 is really where we start to bend the needle and bend the curve more in your favor, more in your direction. And this is a tough one for people to fathom. It was a tough one for me to fathom, but it is build your own banking system. Jeff, what the hell does that mean?
It means you have to have a financial foundation structure underlying your entire financial system, right? And for us, we recommend, we practice, and we execute on high early cash value life insurance, infinite banking system as that foundation. It's our recommended direction. And I have been in it for, 8 years maybe at this point. And I'm going to introduce some things on this podcast that maybe we've never talked about before, but you and I probably have talked about them before, but I've never introduced them on the level that I want to today. But a cash value life insurance policy that you can access that acts as your infinite banking system, and you utilize that to acquire assets, to build your cash reserves, to invest, to just increase the cyclical rate of your money and investments over time. And the more this is why I'm going to introduce some different stuff today, is because the longer I use these tools, the more I have light bulb moments about how you could use them and how they could additionally benefit me and my life and my family and everything else. And I'm like, holy fuck, why didn't I do that at the beginning? Because there's certain ways that it's taught, but I'm so deep down the rabbit hole now conceptually on how you integrate this entire system into your entire life, meaning how do you put every dollar into the system first before it pops out of the back end and you're buying groceries with your system. Because if you can optimize this system to the point where you're putting every dollar into your financial system first and then using money after that, then you're going to earn somewhere between 1% to 6.5% on every single dollar that comes into your ecosystem. And if you think about that from a lifetime earning perspective, a lifetime spending perspective, because we're consumers in the United States, right? All we do is fucking buy shit and consume. And so if you can build your financial foundation so that it funnels through here first and then you consume, and you think about earning 1% to 6% on every dollar that you spent at Amazon your entire life, it really can blow you away when you think about the possibilities of what can be done over a 60, 70, 80 year period. It's wild to think about it. And I wish, like, I'm 44 years old. I started this when I was 35, 36, something like that, when I finally grasped the concept, right? And like, I see how much benefit there is to getting this flywheel moving. And like, I wish I would have started at 16. Holy shit. Like, I think about the money and the dollars that came through the system in my entire lifetime, and it's wild.
I'm going to bring it back to your core here in a minute. But for those of you that couldn't keep up with that, building your own banking system is at first, like, you have to understand what the banks do. The banks only do two things. They store money and they lend money. So storage of cash and finance. What we're trying to do when we say build your own banking system, we're trying to take back control of both of those things. Because right now, 99.9% of you are, unless you're in the tactical empire and understand what we're doing and have implemented it, you are storing your cash at the bank. And the bank is paying you a little bit of money. I don't care if it's 1% or 5%. Don't argue with me on the interest rates right now. They're paying you X%. If you went to that same bank and got a loan, I don't care what it was for, that loan interest rate is going to be higher than what they're paying on your money. So the bank pays you X%. And when you borrow money for them, they're going to charge you X% plus. So a higher number than what you're paying. That is a losing situation. That is what we're saying. You are losing when you're playing traditional banking system, when you're using traditional banking systems in your life. That's why the banks have the biggest buildings in town. Let's just say that. Now, we're going to take back the control. We're going to store cash in high early cash value life insurance policies, where very early on day one, when you put $1 in, you're going to have 91 cents of cash value. That 91 cents is liquid. It is liquidity from level 3. We can borrow against it. When we need something to borrow, because you finance everything in life, even when you pay cash for something, you are foregoing the opportunity to earn interest when you use cash. So you are financing that. Regardless of what you think, you're losing the opportunity. And then when you borrow money, I don't care if it's a 2% car loan or an 8% mortgage right now, you are paying someone else interest. So now we're going to create liquidity. We're going to create cash flow through the storage of money in our own banking system, which is a contract with a life insurance company. So it's a contract. My name's on it. I own this thing. And one of the rights that I have is to borrow money from the life insurance company. So I'm going to borrow from them. The difference here is I'm earning, most likely, I have to say most likely, but with the companies that we use, we are earning a higher amount of money of interest on our money than what their interest rates are on the money borrowed. So let's say I have $50,000 of cash value and I borrow 50 grand. My money, I do not liquidate my money. My 50 grand is going to keep earning about 6.1% right now. When I borrow against it, right now, my insurance loans are like 5.5%. So people are like, well, great. Okay. You got to pay 5.5%, but I'm earning 6%. Well, that's only 0.5% return. Well, what happens if I didn't have that? What happens if I liquidated a bank account and it went from 50 grand to zero? Now, what loss is that? How long is it going to take you to earn back 50 grand and put it in your bank account? And when let's say it takes you 2 years, when you build that bank account back up from 0 to 50, you're back where you started, because you liquidated an account. When you use your own banking system the way that Jeff and I do, you never liquidate an account. So I borrow 50 grand, I go acquire an asset. Let's say it takes me 2 years to get back 50 grand. I paid back my life insurance loans. Where is my cash value? My cash value is not back at 50 because it never went down. It was earning the whole time. So now it's at 50 grand plus, and I've been paying premium. So now it's more than that, right? And so again, my issue, Jeff, is people get too short-sighted. They're like, oh, I'm borrowing money, all debt. Oh, I'm paying this back. Oh, I have interest. It's all bad. I have a bad taste in my mouth. Unless you die, you're going to be here 5 years from now. What position do you want to be in 5 years? Do you want to keep in this cycle of 50 grand to zero, 50 grand to zero? And I say 50 grand because it's an easy number. 50 grand, zero, 50 grand, zero. Or you have 50 grand in a bank account and it's earning nothing. It's just sitting there. So in 5 years, that 50 grand, even though it says 50 grand, it's going to be worth 40 because of inflation. You're not keeping up with any. Or do you want to be in a position where I have 50 grand, it's growing, I can use someone else's money to live my life, acquire assets. That's ideally what we want you to do. That's level 5. And then blink 5 years from now, where are you at? You're ahead of where you've always been. Blink again, 5 more years. You're even farther ahead. And the cool thing about life insurance, high early cash value life insurance, is people like to blow smoke up people's asses and talk about compound interest. Okay. The farther along the timeline you go, the higher the curve gets, the more money you make, you need compound interest. The issue is most people interrupt their compounding because they need to buy a house. because they have an emergency, because they finally want to take that vacation, because they hit retirement and they're like, we have an interruption problem in this country. We have a spending problem. We also have an interruption problem. People are trying to save. People are trying to invest until something goes wrong. And when something goes wrong, they liquidate their shit. And the second you liquidate something, you've interrupted compounding and you just broke the magic.
Yep.
Level 4, ladies and gentlemen. I've never said this. I kind of like this. Level 4 is teaching you how to never ruin the magic. Your money will grow infinitely forever and you won't lose access to it. That is the infinite banking concept, storage of cash and finance.
Yeah. Sorry, I went off squirrel brain at the beginning.
You're good.
This topic excites me so much. Let me explain it to you another way that Sean just described. That was great. So banks use what's called a fractional banking system, right? They have the ability to, every dollar you give them, they can lend on that dollar 9 to 10 times, right? They can back it up with what's called a fractional bank, right? So that means that they can lend your money 10 times. We don't have the ability to do that as civilians, whatever you want to call us, regular people. This particular financial tool, the infinite banking system, allows you to cycle your money once, twice, and 3 times in certain situations, that you can have that same dollar working for you while earning in different capacities. Because Sean talked about earning 6.5% versus earning 0.5%. So that same dollar could earn me 6.5% on one hand, it could earn me 0.5% on another hand, and it could earn me cash flow with an asset that I've got it parked in at the same time. So there are multiple times that you can cycle your dollar. Whereas what he was referring to is if you take the money, you put it in your savings account and you trade it for a truck, you have now lost the opportunity to use that money for anything else. So if I take that dollar and I say, give me that truck, and the guy says it's $1, I give him that dollar is gone one single time and it's done. It cannot earn me any more money. I've got to go back to work and get that dollar again. So for us, like we talk about time being the ultimate resource, right? When you think of it in terms of how much time you're trading to go get those dollars again, for me, it's a priority to hold on to those dollars to make them go to work as many times as they can in our system, and then ultimately never even leave our system at the end of the day. Mm-hmm. So this is such a powerful thing that I wish even good savers understood, because there's people out there that are hyper savers, that are interested in safety and security big time, and they want a year's worth of their expenses. Like, okay, great. If you go buy one of these policies with your year's worth of expenses, and you leave it and never touch it, you'll have access to that cash and you'll be earning the interest, which you don't get with savings. Because if you have $100,000 in your savings account and your HVAC blows out and it's 15 grand, you have to go take that 15 grand from your savings and it's gone. You're down to 85 grand and you got to go save back up to 100. If you have it in a policy that's an infinite banking system, you can go take a loan for $15,000 and your 100 grand sits there and earns interest the whole time and never leaves your system. So just a different angle to take on it. And understanding the opportunity cost of your money is something that I think people get real short-sighted on, because like you have to trade that time away from your family. If you work for 40 hours a week and if you make $2,000, you have to understand that like you have to leave your family to go get that money again for a period of time. Like we are essentially servants of our time traded for dollars, right? And so every purchase you make, that Yeti cooler, that fucking tank of gas, whatever it is, what are you trading for it regarding your life and how much time you have to spend away from doing things that you want to be doing?
Yeah, I mean, I love it. It's we could go on and on with the examples. I had a friend on Facebook post. He said, entrepreneurs, did you pay your quarterly taxes today? Share your pain. My family is $8,000 poorer as a household. He literally wrote that, right? And my simple, and like, I see all these entrepreneurs commenting, yeah, we paid ours. Yeah, we paid ours. Yeah, it sucks. Yeah, we paid ours. And I simply said, I pulled a life insurance loan to pay mine. So my money didn't get liquidated.
Yep.
Like, so
but that's going back to that point of like how much more aware I am than when I started. Yeah. I'm like, okay, where else can I use this? I can use this at property taxes. any annual payments you make, any lump sum payments you make, like even if you need term insurance for life insurance, put it in these policies and then pull a loan to go pay your term insurance once a year. Like, I mean, however you want to do it. And I'm to the point where I'm backing it all the way down to like, how can we use like our monthly nut to where we're cycling that, and maybe, and I've been trying that this year. I've talked to you a little bit about it, but like trying to pull our cash needed for the upcoming month on like the 25th, and then cycle it back in the back end so that we stay 2 or 3 months ahead on the overall policy, but then pull what we need for our living expenses the month prior. Because that way you can work more actual cash into your overall system. And like, this has taken me a really long time to get to. But I mean, the number one thing that I do is put our property insurance or our property tax money in there on an annual basis, because that is multiple 6 figures. And so on January 31st, I pull a loan, pay all of our property taxes for all of our real estate. And then for the next 12 months, our portfolio pays back the loan over and over again. So if you think about doing nothing but that, understanding that it's multiple 6 figures, doing that over and over and over again, that's money that you would have been letting sit with the mortgage company in their escrow account, earning you 0 and earning them whatever rate of return they're doing with your money, right?
Yeah, I mean, I'm on page with it. So it's interesting because then he responded to my comment and said, love it. I'm curious, where do you have your liquid money now for maximum return? And it's like, and I replied, I said, most of my liquid cash gets converted into cash value, because I'm always doing 3 things. Once you have this system in place, this is why it's called infinite banking as well. When you have this system in place, you're doing 3 things with your money in regards to your bank. You're either paying your current premium. And if your premium is paid and you have an outstanding loan, then the second thing you're doing is paying back your loan, because every dollar you pay back today is going to decrease your accruing interest. It's going to give you another dollar you can borrow tomorrow. If your premium is paid and you have no outstanding loans, what is the third thing you're going to do when you find yourself sitting on cash? You expand your banking system and start your next policy. So I don't sit on cash for 90 days would be the maximum, because the way that I've spread out I pay all my premiums annually in full. But I have 6 policies. So basically every 2 to 3 months, I have a policy that's due. So I literally don't sit on cash, because when a premium's due, I pay it off. When my assets do well and I sit on more cash than normal, I pay back my loans. And like, all my loans were paid off basically up to 2 weeks ago. And then now I've pulled 6 figures worth of loans to acquire more real estate. And then I have to wait 6 to 12 weeks to be able to cash out, refi those properties, get that money back, pay down my loans. Or if another property is available, just cycle the money again. So this is infinite banking. I think the conceptual thing that you're talking about, getting all your money in and then using that for it, like, that's a tough pill to swallow. It makes complete sense if you're talking simple numbers. Like, my family makes 10 grand a month and we spend 8 grand a month. You only need to be 1 month ahead then, because you're going to pull 8 grand of loans. Then next month, you're going to get paid 10 grand. You're going to take 8 of that, pay back your loan that you used for your expenses on your credit card. And then you're just going to do that. And over time, you'll be paying your premiums and it's going to grow. And you're using the same $8,000 every single month. Like, that makes sense to me. It's just a really hard pill for people to swallow. Like, every dollar I'm putting in these things, you just need to get a month ahead. But the issue comes is like families like me, where like 1 month we might spend 8 grand, another month we might spend 18 grand. That gets a little tough, because you have to be way more than a month ahead if you have variable expenses like us.
Well, yeah. Or you could just operate it on a year basis. Then if you get a year ahead, then you could just say our average monthly spend is $8,000, but we do go up to 18. And other times we're at 6 grand, and the aggregate over the year evens itself out.
We could do it now, because we've been putting money into them for 3.5 years. So we could definitely do what you're doing, what you're trying to do. We could do that now. I just have to I have to organize myself a little bit before I get on that pace. But
same. Because this occurred to me about a year ago, and then I started talking about it in the group a little bit. But like, the power of bringing every dollar into your system is how you can really think about expanding it. Like, fucking, who doesn't have a pile of Amazon boxes on their front porch? If all that money went in my system first before it went on my porch, we would be way better off.
That's right. Man, I love it. Like I said, I have a what I view as a healthy obsession with building your own family bank. Other people will view it as an unhealthy obsession. But ladies and gentlemen, it starts with education. If you've been listening to us enough, you know that we do what it is that we're trying to educate people on. If you have questions, let us know. Just remember, infinite banking is taking back control of the storage of cash, the financing function in your life, and never interrupting the compounding. And if you plan on living another day and another day and another day, you're going to be very, very happy that you've implemented this system. Even if it's not on the realm of acquiring assets, if it's just to buy a new car every 5 to 7 years, like all of you are doing, imagine 40 years from now, every single dollar you've spent on a vehicle, you've had that growing for you. And you've just pulled a loan every 5 years for a $50,000 vehicle without ever touching the money that was growing. Ladies and gentlemen, you'll be really happy that you did. As I said on a recent podcast where we debunked infinite banking myths, I said, Jeff, have you ever met anyone that has implemented this system appropriately and regretted it? And the answer was no. I also know no one that has implemented this system and regretted it. The longer people own it, the more vocal and adamant they are that it is the best asset that they've ever put their money in. And the only people who tell me it's not the best asset to put your money in are the people who have never owned it and they don't understand it.
Well, and you don't even have to overcomplicate it. To your point, the car analogy is fantastic, or even just a $10,000 family vacation once a year or something like that. You don't have to make this like super complex. I'm out buying apartments or I'm doing something crazy with it. It's just simple recurring spending that you do, if funneled through this system over a long period of time, will benefit your family. And if you're a big saver, think about the ability to utilize this money in multiple forms. So you can save, providing the backstop that you want to, and the peace of mind that you want for your family, growing at 6.5%. And then you're also getting the death benefit for your family. So there is a back end death benefit that is also providing peace of mind and security for your legacy and your family as well. Mm-hmm. So like there's just a lot of aspects to this that are beneficial, and you don't have to do it our way necessarily. Just you need to do it right. And that's how I want to finish it. These policies have to be written correctly. There's only about 3 companies that do them properly for high early cash value. You need to reach out to a trusted person. It will write the policies correctly. So if you need help with that, you can hit us up. We can shoot you in the right direction. Otherwise, do not run straight out to your nearest place that you have access to and ask for a whole life policy, because it'll likely be written incorrectly.
Perfect. Jeff, love it. I appreciate you exposing it to me 5 years ago, 4 years ago, and we're just trying to expose more people to it. So ladies and gentlemen, that was level 4. Continue on to level 5, 6, and 7 next.